Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of business for you. And let me tell you, this report's got more twists than a pretzel. Get ready for a deep dive into the financial health of some crypto-focused ETFs, where fortunes were made and perhaps a few lessons were learned. And hey, if you are feeling like you are already ahead of the curve with this stuff, make sure you are subscribed. You'll want to join our community discussion on Discord, linked in the description below. So, what are we looking at here? This is a formal report from Valkyrie ETF Trust II, covering their CoinShares Bitcoin and Ether ETF, CoinShares Bitcoin Leverage ETF, and CoinShares Bitcoin Mining ETF. Basically, 3 ways to play the digital asset world. All reporting their yearly results up to the 30th of September 2025. Let's get straight to the money for the CoinShares Bitcoin and Ether ETF. If you had a hypothetical $10,000 investment, the costs for the past year were around $160, which is about 1.24% of your investment. Decent, but not exactly pocket change. Performance-wise, this fund did pretty well. For the year ending the 30th of September 2025, it saw a return of over 58% based on its net asset value. That is a big jump, and the report says it is largely due to increased digital asset adoption and positive regulatory news like the Genius Act passing, which really cleared things up for stablecoins. Now, if you went for the CoinShares Bitcoin Leverage ETF, things got even more exciting, or maybe a little scary depending on your risk tolerance. This fund aims for twice the daily performance of its index, and wow, did it deliver for the year a massive 111.68% return based on net asset value. That is some serious leverage at play. And then we have the CoinShares Bitcoin Mining ETF. This one focuses on companies that actually mine Bitcoin. It also had a stellar year, bringing in a return of over 133%. The report suggests that miners were not just mining Bitcoin, but also capitalizing on hosting AI workloads, which really boosted their performance. Let's look at how much money is actually in these funds. For the Bitcoin and Ether ETF, net assets were about $40 million. The Bitcoin Leverage ETF had around $15 million, and the Bitcoin Mining ETF was the largest, with nearly $260 million in assets. What were these funds actually holding for the Bitcoin and Ether ETF as of the 30th of September 2025? The top holdings were surprisingly conservative: First American Treasury Obligations Fund at 61.1%, and US Treasury bills at 56.3%. You might think, wait, where is the Bitcoin and Ether? Well, they were mostly invested in futures contracts, but a big chunk was in these very safe money market funds and treasury bills. Digging deeper into how they got their crypto exposure, the Bitcoin and Ether ETF held CME Ether futures contracts for 50.4% of its total exposure and CME Bitcoin futures contracts for 49.4%. So they were betting on the future price of these digital assets through these contracts. For the Bitcoin Leverage ETF, the story was similar, but with a twist. Their top holding was also the First American Treasury Obligations Fund at a whopping 80%, and for their crypto exposure, it was all CME Bitcoin futures contracts, making up 76.3% of the total exposure. It seems like a lot of these funds are using safer assets as collateral or to manage risk. The Bitcoin Mining ETF, however, was heavily invested in actual companies. Their top issuers were companies like Iron Limited at 19.9% and Cypher Mining Inc. at 14.2%. These are the businesses that deal with the heavy machinery and energy needed to mine Bitcoin. Now, let's talk about what it costs to run these funds. For the Bitcoin and Ether ETF, the management fees alone were over $350,000. For the Bitcoin Leverage ETF, it was close to $387,000. The Bitcoin Mining ETF spent even more, around $1.3 million on management fees. This is despite the portfolio turnover for the mining ETF being a notable 40%, suggesting active trading, unlike the 0% for the other two. Looking at the detailed holdings for the Bitcoin and Ether ETF, the US Treasury bills section shows an investment of $22,924,938, with a cost of $22,923,463. This indicates they were holding these very safe government-backed short-term debt instruments. The futures contract section, specifically for the Bitcoin and Ether ETF, shows CME Bitcoin futures with a notional amount of over $20 million and CME Ether futures with a notional amount of over $20 million as well. This confirms their core strategy of gaining exposure through derivatives. Let's zoom in on the financial highlights for the Bitcoin and Ether ETF on a per-share basis. For the year ended the 30th of September 2025, the net asset value per share grew from $16.35 to $17.35. That might not sound like a lot, but the total return at net asset value was a fantastic 58.79%. The expense ratios are a good indicator of how much of your return is eaten up by fees. For the Bitcoin and Ether ETF, the gross expense ratio was 1.24%. For the Bitcoin leverage ETF, it was a higher 2.24%, and the Bitcoin mining ETF was the most cost effective at 0.75%. When you are talking about high returns, these percentages might seem small, but over time they add up. Looking at the statements of changes in net assets for the Bitcoin and Ether FUC, a net investment income of over $660,000 for the year, a healthy sign, but they also paid out over $17 million in distributions to shareholders. This means they were returning a significant chunk of their gains, which can be good for investors, but also reduces the fund's asset base for future growth. Now for the risks, there are risks. The report dedicates a huge chunk to them, and they're not to be ignored, especially with leveraged crypto funds. For the Bitcoin and Ether ETF, they explicitly mentioned that the prices of Bitcoin and Ether have been historically highly volatile and could decline significantly, even to zero. They also warn about futures contracts risk and the cost associated with rolling those contracts which can eat into returns. And for the Bitcoin leverage ETF, they do not hold back. Under aggressive investment risk, they state, the value of an investment in the fund could decline significantly and without warning, including to zero. You may lose the full value of your investment within a single day. They practically write, "This is not for the faint of heart" in bold neon letters. They also highlight liquidity risk, meaning that in times of market stress it could be tough to sell these assets at a fair price. And for the Bitcoin mining ETF, there is industry concentration risk, meaning its performance is heavily tied to the health of the information technology sector. The auditors Cohen and Company Ltd give a clean opinion. They've audited these statements and believe they fairly represent the financial position. They do, however, make a note and emphasis of matter liquidation, specifically regarding the CoinShares Bitcoin Leverage ETF. This is a big deal. Around the 16th of December 2025, this leveraged fund will cease operations and distribute its assets. So while it had a great year performance-wise, the decision has been made to wind it down. This could signal concerns about future volatility or regulatory changes that make such a leveraged product unsustainable. So, what is the story here? We see crypto ETFs performing incredibly well in a year marked by positive regulatory developments and increased adoption. The Bitcoin mining ETF, in particular, seems to have found an additional sweet spot by aligning with the AI boom, leveraging their energy infrastructure. The Bitcoin and Ether ETF also rode the wave of digital asset growth. However, the leveraged fund's liquidation, despite its stellar returns, is a stark reminder of the extreme risks involved and perhaps a signal of cautiousness from management or the market ahead. For investors, the key takeaway is to understand the underlying strategy, futures contracts, direct company holdings, or leveraged bets, and to be keenly aware of the associated risks. Especially with volatile assets like cryptocurrencies, diversification, even within crypto-related investments, is crucial. That is our breakdown of Valkyrie ETF Trust II's latest report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.